Let's check out the City of Ames budget overview for recommended year 2018-2019 fiscal year. The budget was almost $234 million, which was divided between lots of businesses and funds, and it includes our ongoing operations along with the capital improvements in the first year of the CIP. Some things to know about the overall budget is that the property tax is down 31 cents from fiscal year 2017-2018. We have increased taxable and assessed value for every class of property, but that's not evenly distributed. The revaluation reduced rate shifts property taxes to the residential class of property, but the rate reduction and new growth will mitigate the impact. We have a balanced general fund budget for operations and capital, so that means that the revenue we bring in from the general fund will match the expenditures. There was no growth in local option sales tax revenue, and the utility rate increases for water, wastewater, and resource recovery per capita fee. So first, we'll start with property tax. Remember, we are talking about the City of Ames, and we are only about a third of the entire levy if you're in the Ames City and Ames School District. This is for the year 2017-2018. Even though the City of Ames is 1/3 of the levy, the City of Ames property tax is split into 4 different sections that your property tax will go towards: city, school, county, and DMAC. The 2017-2018 rate being city at 32.80%, school district at 45.34%, county at 19.73%, and DMAC at 2.10%. Do you ever wonder how the Ames property tax rates compares to other cities in Iowa? Well, here you can check it out. As you can see, Ames is the bright red line, and we have always had one of the lower rates. Now let's talk about the tax levy. We will talk about the details on the changes in levy rates for this year to the proposed year. As stated before, we are down 31 cents. All of these levies are down in rate and up a little bit in dollars, but the increased value going up 7.9% allows us to reduce the rate and bring in additional funding to fund all the expenses that we have for this year. The levies we have in place are the general levy, employee benefits, transit, which is our portion of the contribution to SIRIDE, total of operating without debt service, and then debt service. All of these bring the total levied rate of about $10.07. This is down from our current rate of about $10.38. The total tax dollars that would bring in is $29,458,490. This is an increase of about $1.3 million, or 4.72%. In this increase, there are new positions, such as a police officer, firefighter, a half-time position in animal control, and a half-time position in the library. Those new positions together total to about $240,000. Without those, the total increase in dollars would have been about 3.86%, and the rate would have been about $9.98 versus the $10.07. That is the impact of those new positions. So remember that the total levied rate is $10.07, which is down from the current rate of $10.38. Well, how did that happen? Part of it was from the modest increase in expenses, but a big reason why the rate is down is because of the valuation we spread those expenses across is up. Here you can see the taxable valuation percentage change. This is the largest increase that we've had over several years. This includes all different rollback factors, such as revaluation, rollback, and changes in property. This has all affected the taxable valuation being up at 7.9%, which is a big factor into the rate going down 31 cents. So when you look at the changes in assessed and taxable value, there is good news that our classes of property, such as residential, commercial, and industrial, are all up in both assessed value and taxable value. Remember, assessed value is the actual value of the property, and taxable value is the value reduced by different rollback factors. There is a big difference this year in how those classes went up. Residential value is up 10.29%, commercial is up 4.12%, and industrial is up 1.1%. The utility valuations are allocated statewide. There is utilities and utilities subject to excise tax. That's railroads, telecom, water, and gas utilities. This is not our electric, but the commercial electric utilities. There's also reduction for military exemption, and that is how we come down to our change in valuations. We went from $2.7 billion in taxable value up to $2.914 billion. This is an increase of $214 million. So what were the changes in taxable valuation, and what makes up that number? The total increase for taxable value without the utility subject to excise was $212,795,000. We had $110 million just in new improvements. This is properties that aren't paying taxes this year because they are new coming on, but they will be next year. We also have some transfers in class, such as a commercial property becoming a residential property, making the taxes different. Here you can see increased valuations and the changes in taxable value from residential, commercial, industrial, utilities, and exemptions, which could be anything that could provide exemption from property tax. A big change here is the change of value due to state rollback. You can see that the net increase on all the properties is $123 million, but most of that is from residential being the highest amount up. There is some fund balance used in levies, such as the employee benefits levy with a small amount that is $38,000. A fund balance is also used in the debt service levy. There are GEO bonds that vary from $7.9 to $10.3 million over the course of the 5-year capital improvement plan. We look at all the debt services that pay for those existing bonds that we have. Due to refundings and bond issues that come in lower than expected is what leaves the city with some fund money. So what's the plan for the use of that fund money? The plan for the use of that fund money going forward is to even out the levy. You can see that the levy will stay around the same at about 3.22 for each of those years. If a large referendum passes, such as the Healthy Life Center, then we will be leveling this out at a new level. Now, let's look at the total levy and how it is paid by each of the property types. The new rate of $10.07 will bring in a total of $29,458,000, which we have already stated is an increase of about $1.3 million. This is not spread equally across the different types of property. This looks at everything. All the increases, new value, revaluation, and rollback. So, of the additional $1.3 million, $1.261 will be picked up by our residential class of customers. This isn't all paid by existing taxpayers because we have had some new growth. This chart shows how it is allocated. When looking at the $1.261 million, about half of that is paid by the new taxpayers, and the other half is paid by the existing. One thing to take note of is you might think that if your rate is going up 20%, then your taxes will also go up 20%. But they aren't going to with this new budget because your value that was increased is getting rolled back and the proposed budget reduces the rate. This is how we will mitigate the increase in valuation, and the amount mitigated is about $1 million. So, as a class, if we would have kept the same rate and not changed anything, we would have paid a little more than $1 million additional dollars in taxes. Also, if we wouldn't have had that $110 million in new improvements and growth, our rate would be $10.46 rather than the $10.07 it is. The new growth and revaluation had the impact of lowering the rate. In the general levy, property taxes isn't our only revenue. We have had some increase in hotel-motel tax, employee benefits transfer increase, building permits, and other revenue factors. Along with our revenue increase, we have to look at our increase in costs. Personal services has increased our costs the greatest. with $1.1 million in new costs. Approximately 1/4 of that is the new positions we have in place. Altogether, we did better than expected with revenues and with expenses. So now let's look at the cost of city services. This chart shows citizens where some of their money goes to with property tax. For every $100,000, taxpayers will be paying $560. The number on this chart shows how that money is split up. We have spent a lot of time focusing on property taxes, but another big part of our budget is charges for services, which is primarily utility rates. The utility rates include electric, water, sewer, storm sewer, and resource recovery. This chart shows the estimated increase in those services over the next 5 years in the CIP. The intent of this is to not stack different increases with each other. Again, these numbers are not set or permanent. They are only estimated. The large number of 13% estimated for sewer in year 2022-2023 is estimated for a large future project in the sewer plant for nutrient reduction that is still being planned. That large number might worry you, but don't worry quite yet about it, as it is subject to change and or spread out as the planning process continues for that project. Some good news that goes along with this chart is that electric completed the large project of converting from coal to natural gas. This project ended up doing very well. We have expected a 4% increase in the energy cost adjustment, which is the variable part of the rate to our fuel and purchase power. But that 4% increase didn't happen. This is a result of natural gas rates being pretty strong, locking in some good contracts, good variable portion, and good ability to purchase power. There was an increase in electric last year, but you can see in the chart that there are no estimated increases in the next 5 years of the CIP for electric. Storm sewer rates are also not expecting any rate increases due to small increases in previous years. With resource recovery, we have increased the per capita fee this year from $9.10 to $10.50. This resource recovery rate will probably have an increase in the next 5 years of the CIP, but it's not determined yet what that will be. This chart shows an example of what the $3.50 and 3% increase look like for households with certain amount of electric and water usage. The amount shown on here is what was calculated to be the median use residential customer. This will vary with each household depending on their amount of electric and water usage. But this chart shows that for the median use residential customer, they would experience a total of 1.22% increase in their bill for water and electric. This chart also shows what the increase would be for a median use commercial customer, which is called large power. The median increase for this category would be 0.42% increase on their bill for electric and water. The City of Ames budget overview revolves around a lot of information, which you just heard in a summarized version. If you have any questions or want more information about the City of Ames budget overview, you can contact the City of Ames Director of Finance, Dwayne Pitcher, and you can go to the City of Ames Finance Department's website for more information on the budget overview.